Hi, my name is Alex Carlucci with GusandCho.com. I want to give you guys a little tool for yourself to use so you can maybe do a quick calculation so you don't have to call a mortgage broker right away to see if you're even close. Now, this isn't going to be scientific for you, but this is going to give you a little basic rule of thumb. So let's start with how much do I qualify for a home? So what you do is you take your gross monthly income. Calculating your gross monthly income is the tricky part. So if you're straight salary, then that's easy. So if you make $60,000 a year, that's $5,000 a month. We do everything in monthly terms. So $5,000 a month would be your, times 12 is $60,000. So for safety, we'll use 50% of that. That's a safe number. Some FHA we go a little higher. Conventional sticks at 50. So let's just stay 50. So you take 50% of that. 50% of 5,000 is 2,500. You can use that 2,500 to pay for your mortgage, including your taxes, your insurance, the private mortgage insurance, if there's any HOA. So your total mortgage payment plus any monthly debts on your credit report, car payments per month, credit cards per month. Now, if you have collections and student loans, it gets a little tricky. So to play it safe, if your collections are more than 2,000, cumulative, then hit for 5% of them. So if you have $3,000 in collection, use $150 a month hypothetical fake payment. Now, for safety reasons for now, I want you to use 1% for your student loans. So if you have $100,000 in student loans, they're going to hit you for $1,000 a month payment. Now, conventional's got this little thing you do, a trick to reduce that. FHA's got a trick to reduce that 1%, but for safety reason, use that. Now, if you want to just cut it in half, most likely we can probably cut it in half. And that's if that all adds up to less than $2,500, then you're probably okay. You should call a mortgage broker. You qualify mathematically. Now, if you want a conventional loan in normal times, not COVID, you want to have a 620 or credit score, better to go conventional. If you're below 620, then you're going to go FHA. If you're below 580, you're going to need 10% down FHA. If you're above 580, it's 3.5% down. And if you're first-time home buyer conventional above 620, you could do 3% down. So do you have enough money? What's your debt to income ratio? Do you qualify? And do you have enough trade lines open? Do you have enough credit? So your credit, it's not just, if you have a 580 credit score, you might have no credit open and you have a bunch of collections, you're not eligible for any type of loan. So the credit is the most complicated thing that I can't teach you on this. But let's say your debt to income ratio works and you do your quick little math based on what I just told you. And let's say that your income, let's say your income is salary, so you've got your income right. And let's say you got enough money for the down payment, and you can always ask the seller for closing cost credits, then you know quickly that you might qualify. Now, if you're self-employed, it gets real complicated. They have to go off the adjusted gross income average for the last 2 years. So you can't go off what you think you make, you got to do an adjusted gross, and you absolutely have to call a loan officer to help you with a self-employed borrower. If you're hourly and you are variable hours, you work 20 hours and you work 35 hours, you have to be doing that for a couple years and average those hours over the 2 years because it's variable. If you don't have 2 years of working variable income and you've been working full-time a year ago and now for the last year you've been working variable hours, you're not eligible because you're not full-time anymore. You can't go from full-time to part-time. But if you're go from part-time to full-time and you're full-time now, you're okay. So when it comes to income qualifying, you got to know some really weird tricks and you definitely have to call your loan officer. But hopefully you're like a full-time person. You can take your yearly income, hourly or salary, divide it by 12, 50% of it. If you qualify for debt income, good. If you got the money in the bank for down payment, good. And then you got to call your loan officer to work out the rest. Give me a call if you got any questions. We do mortgages here. My phone number is 630-915-7550. Please subscribe. It helps us help you.